For decades, economists believed there was one financial law that could never be broken. Every country in history followed this rule without exception. Break it, and your economy collapses. Ignore it, and your currency dies. This rule shaped the modern world. The rule was simple and terrifying. If a country prints too much money, disaster follows. Prices explode and savings become worthless. People lose trust in the system. History has proven this again and again. Entire nations have collapsed because of this mistake. Economies shattered almost overnight. Governments fell and societies panicked. Hyperinflation became a nightmare people never forgot. The lesson seemed permanent. In the 1920s, people pushed wheelbarrows full of cash to buy bread. Money lost value faster than it could be printed. Salaries became meaningless within hours. Trust in money vanished completely. The world promised never to repeat this. So when one country began printing trillions of dollars, economists expected catastrophe. Headlines predicted collapse. Experts warned of hyperinflation. Investors braced for chaos. Everyone believed the ending was obvious. But something unbelievable happened. The collapse never came. Prices didn't explode. The economy didn't implode. The disaster never arrived. The world was left confused. Inflation barely moved. The financial system stayed intact. Markets continued functioning normally. The country kept growing slowly. Economists had no explanation. That country was Japan. A nation known for discipline and innovation. A country that once dominated global markets. A country that refused to collapse. A country rewriting economic history. In the 1980s, Japan was unstoppable. Its economy was the envy of the world. Companies expanded globally at record speed. Investors believed Japan would dominate the future. Confidence felt limitless. Tokyo real estate became the most expensive on earth. Property prices rose beyond imagination. Investors rushed to buy anything they could. Wealth seemed guaranteed. The bubble kept growing. At one point, Tokyo land became more valuable than entire countries. The land under the imperial palace shocked the world. Its value was said to exceed all of California. The numbers sounded impossible. But investors believed the rise would never end. Japan's stock market surged to historic highs. Companies became global giants almost overnight. Investors poured money into every sector. Optimism turned into euphoria. The entire nation felt unstoppable. People believed Japan would dominate the 21st century. Books predicted it would surpass the United States. Businesses feared being left behind. The future seemed decided. Japan was the model of success. Then everything changed in 1991. The bubble burst without warning. Markets suddenly panicked. Confidence evaporated overnight. The unstoppable rise ended instantly. Japan's stock market collapsed by over 60%. Trillions in wealth disappeared. Investors watched fortunes vanish. Fear replaced optimism. The economic miracle shattered. Real estate prices began collapsing next. Buildings lost value year after year. Owners were trapped in massive debt. Banks became dangerously exposed. The crisis spread everywhere. Banks had lent billions during the boom. Now those loans were turning toxic. Borrowers could no longer repay. Financial institutions began drowning in debt. The system started to freeze. Businesses stopped expanding. Hiring slowed dramatically. Growth disappeared from the economy. Confidence faded year by year. Japan entered a deep freeze. Economists called it the lost decade. A period of stagnation and uncertainty. Recovery never seemed to arrive. Hope slowly turned into frustration. The nation waited for change. But the decade never ended. 10 years became 20. Then 30 years of slow growth. Japan's crisis became permanent. The government grew desperate for answers. Japan faced a terrifying economic problem. Prices were no longer rising. Instead, they were slowly falling every year. This sounded good to consumers at first. But falling prices hide a dangerous trap. Deflation had begun. When prices fall, people delay spending. Why buy today if tomorrow is cheaper? Businesses lose customers and profits shrink. Companies stop investing in growth. The economy slowly freezes. Deflation changes human behavior. Consumers wait. Investors hesitate. Businesses cut costs. Fear replaces optimism. The economic engine slows down. Japan tried traditional solutions first. The government lowered interest rates repeatedly. Borrowing became cheaper than ever before. Loans were easier to access. But the economy refused to move. Interest rates approached zero. This was supposed to encourage spending. Cheap loans should spark investment. Growth should have returned quickly. But nothing changed. The government tried stimulus spending next. Massive infrastructure projects appeared across the country. Roads, bridges, and railways expanded everywhere. Billions were spent to restart growth. The results remained weak. Debt levels started rising rapidly. Government borrowing increased every year. The nation hoped spending would restart the economy. But growth stayed slow and fragile. Desperation began to grow. Traditional tools had failed. Interest rates were near zero. Government spending was already massive. Japan had run out of normal solutions. Economists had no clear answers. The country faced the unknown. That's when Japan considered something radical. Something never attempted at this scale before. A policy many feared would end in disaster. A last desperate experiment. The world watched closely. Japan decided to print money on an unimaginable scale. Not millions. Not billions. Trillions of dollars. A financial experiment had begun. History was about to change. The Bank of Japan began buying government bonds. This meant the central bank was funding government spending directly. Money was being created digitally. The scale was unlike anything seen before. A new era of monetary policy had begun. The goal was simple. Flood the economy with money. Encourage banks to lend and people to spend. Push prices higher again. Restart the economic engine. It was a massive gamble. But Japan didn't stop with bonds. The central bank started buying corporate debt. Private companies now depended on central bank support. The line between public and private blurred. The experiment kept expanding. Then came something even more shocking. The Bank of Japan began buying stocks. A central bank becoming a stock market investor was unheard of. Financial rules were being rewritten. The world watched in disbelief. The central bank started buying ETFs. These funds tracked the entire stock market. This meant Japan was quietly supporting its own market. Prices were being stabilized artificially. The safety net grew stronger. Eventually, the Bank of Japan even bought real estate funds. The central bank now influenced property markets. Stocks, bonds, and property were connected. The entire financial system felt supported. The experiment kept growing. Slowly, the Bank of Japan became the biggest investor in the country. It owned huge portions of financial markets. Its balance sheet expanded dramatically. The central bank's power became enormous. The rules had changed forever. Imagine your central bank owning your stock market. Imagine it supporting prices whenever markets fall. That became Japan's reality. Stability replaced volatility. But risks quietly grew beneath the surface. Economists around the world were alarmed. Printing money always ends badly. History had shown this repeatedly. Many predicted disaster. Warnings filled newspapers and reports. Experts predicted hyperinflation. They predicted currency collapse. They predicted financial chaos. Japan was expected to fail quickly. The countdown to disaster had begun. Economists waited for inflation to explode. They expected prices to surge within months. Investors prepared for chaos. Markets braced for instability. The world watched Japan closely. But months passed with no disaster. Then years passed. Inflation barely moved. Prices stayed stable. The expected crisis never arrived. The Japanese yen remained strong. Investors kept trusting the currency. Financial markets stayed calm. Stability replaced fear. Economists grew confused. Japan continued printing more money. The experiment didn't stop. Each year brought new stimulus programs. Each year increased the scale. Confidence slowly returned. The Bank of Japan's balance sheet grew enormous. It reached levels never seen before. The central bank owned massive assets. The financial experiment intensified. History was being rewritten. By the 2010s, the Bank of Japan owned huge portions of government debt. The government effectively owed money to itself. This blurred traditional economic rules. The system became something entirely new. The central bank also owned major parts of the stock market. This had never happened before. Public institutions were shaping private markets. Financial history entered unknown territory. The world kept watching. By 2020, the scale became shocking. The Bank of Japan held assets worth more than the country's economy. This had no historical precedent. The rules of money had changed forever. The experiment succeeded. Japan had printed money for decades. Yet hyperinflation never arrived. The economy never collapsed. Society remained stable. The impossible had happened. Economists were stunned. Japan had quietly rewritten the rules of modern economics. The unthinkable had become reality. Printing money didn't destroy the country. Instead, it saved the system. A new financial era had begun. Then the world faced its own financial nightmare. In 2008, global markets began collapsing. Banks failed across continents. Panic spread through every major economy. The crisis became global. The global financial crisis shocked governments everywhere. Stock markets crashed rapidly. Banks struggled to survive. Economies froze almost overnight. The world faced recession. Suddenly, the United States faced Japan's old problem. Growth disappeared. Inflation stayed low. Recovery seemed impossible. Fear spread through policymakers. Japan's story became relevant again. Central banks searched desperately for solutions. Traditional tools had failed once again. Interest rates dropped close to zero worldwide. Governments faced a terrifying question. What comes next? That's when the world remembered Japan. Its experiment suddenly looked less crazy. Its strategy seemed possible. Its lessons became valuable. The world began paying attention. The United States made a historic decision. The Federal Reserve started printing trillions. Massive stimulus programs were announced. Financial markets received unprecedented support. A new era began. Europe followed soon after. The European Central Bank launched its own stimulus programs. Governments borrowed at record levels. Money printing spread across the world. Japan was no longer alone. Quantitative easing became global policy. Central banks created money at historic scale. Markets depended on cheap money. Investors embraced the new reality. The financial world transformed. The unthinkable became normal. Printing money was no longer taboo. It became the primary economic tool. Governments relied on it repeatedly. The global experiment had begun. Japan was never the exception. Japan was the prototype. The rest of the world had joined the experiment. A global monetary shift had occurred. History had quietly changed. Governments began borrowing more than ever before. Debt levels climbed to historic highs. Trillions were spent to support economies. Markets depended on constant stimulus. A new financial reality emerged. Interest rates remained near zero across the world. Borrowing became cheap and easy. Investors searched desperately for returns. Risk-taking increased dramatically. Asset prices began rising everywhere. Stock markets surged to new highs. Real estate prices skyrocketed globally. Wealth expanded rapidly for asset owners. Inequality began quietly growing. The financial gap widened. Cheap money changed investor behavior. Risk felt smaller than before. Speculation became common. Markets relied on central bank support. Confidence grew dependent on stimulus. Governments realized borrowing had fewer immediate consequences. Debt kept increasing each year. Stimulus became a recurring solution. Economic policy shifted permanently. The rules had changed again. Central banks gained enormous power. Their decisions moved entire markets. Their policies shaped global economies. Financial systems depended on their actions. Influence reached historic levels. The line between government and markets blurred further. Public institutions shaped private outcomes. Markets reacted to policy announcements instantly. Financial independence began fading. The system evolved quietly. Many people never noticed the shift. Daily life continued normally. Jobs, salaries, and businesses carried on. But beneath the surface, money itself had changed. A silent transformation unfolded. Japan's experiment quietly reshaped global finance. What once seemed radical became standard policy. The world followed the same path. The experiment expanded globally. The system kept evolving. But a dangerous question remained unanswered. Could this continue forever? Could economies rely on endless money creation? Could the system survive long-term? The uncertainty remained. For years, inflation remained surprisingly low. Despite massive money printing, prices stayed stable. Economists debated endlessly. Predictions kept failing. The mystery deepened. Then the world changed again in 2020. A global pandemic shut down economies. Businesses closed overnight. Supply chains collapsed. Governments faced an emergency. Governments responded with unprecedented stimulus. Trillions were printed within months. Direct payments reached citizens. Emergency programs supported businesses. The scale shocked economists. Central banks expanded their balance sheets dramatically. Financial markets were protected from collapse. Investors felt reassured once again. The stimulus reached historic levels. The experiment intensified globally. For a moment, the system held steady. Markets rebounded quickly. Confidence returned faster than expected. Economists felt relieved. The strategy seemed to work again. Then inflation finally arrived. Prices began rising worldwide. Energy costs surged rapidly. Food became more expensive. Households felt the pressure immediately. For the first time in decades, inflation surged globally. Central banks faced a new challenge. The experiment suddenly looked risky. Economists began warning again. The debate returned. Interest rates began rising again. Borrowing became more expensive worldwide. Markets reacted with uncertainty. Investors grew nervous. The system faced new pressure. Suddenly, Japan looked different again. Inflation remained lower than in other countries. Its economy stayed stable. The long experiment continued quietly. The mystery deepened further. The country that printed money for decades still stood strong. The predicted disaster never arrived. The financial system remained stable. The world kept watching closely. The question remained unanswered. Japan had quietly defied economic history. Money printing didn't destroy its economy. Markets remained calm. Confidence persisted. The world struggled to understand why. Economists had always warned against this path. Hyperinflation was expected. Currency collapse was predicted. Societies had failed in the past. Japan had proven them wrong. The central bank's power became undeniable. Its policies influenced every aspect of the economy. Markets, households, and businesses all depended on it. This power had never existed before. Yet the experiment carried hidden risks. Reliance on central bank support grew over decades. Markets adapted to the safety net. But the system became fragile. One misstep could trigger chaos. Generations grew up unaware of this silent revolution. Money, credit, and markets had changed fundamentally. People lived normally. But beneath the surface, a financial experiment had reshaped reality. Other nations watched carefully. Could this approach work elsewhere? Could printing money save economies globally? Japan became the blueprint. The world followed quietly. Central banks worldwide adopted similar strategies. Trillions of dollars, euros, and yen were printed. Stimulus programs grew massive. The global financial landscape had changed. Yet questions remained unanswered. How long could this continue? Could markets survive infinite money creation? Uncertainty lingered everywhere. The world had entered uncharted territory. Investors and economists debated fiercely. Some argued the system was stable. Others warned of hidden danger. The tension was palpable. History had never faced this before. Japan's long experiment became a symbol. The country had quietly rewritten the rules. Printing money didn't destroy its economy. Instead, it reshaped global finance. A new era had begun. The global economy had learned a critical lesson. Central banks could print money without immediate collapse. Markets adapted. Economists had to rethink old theories. The rules of finance had shifted. Yet the experiment was not without dangers. Fragility had increased. Debt levels soared. Markets relied on constant support. The financial system walked a tightrope. The world faced a paradox. Printing money could save economies. But over-reliance could create fragility. Policymakers balanced carefully. Small mistakes could trigger collapse. The stakes were enormous. Japan had become the prototype. Its decades-long experiment proved stability was possible. But the cost remained hidden. Future generations might inherit risks. The shadow of uncertainty lingered. Investors learned a new truth. Asset prices depended on policy more than fundamentals. Confidence was engineered. Markets followed the rules set by central banks. Reality had quietly shifted. Governments relied on printing money repeatedly. Crises were softened by stimulus. Economies survived shocks that would have destroyed them decades ago. Policy became the ultimate safety net. But questions remained unanswered. Could this continue indefinitely? Could debt grow forever? Could markets remain stable? Uncertainty hung over the financial world. Japan's long-running experiment had rewritten the rules. Printing money didn't lead to collapse. Markets stabilized. Economists re-evaluated history. The world had entered uncharted financial territory. Today, Japan remains a living laboratory. Central banks worldwide watch closely. Policies evolve continuously. Lessons are applied globally. The experiment continues in real time. The story is far from over. Each decision shapes markets, debt, and wealth. The financial system quietly adapts. Japan's experiment stands as both guide and warning. The world watches, waiting for the next chapter. Japan's experiment forced economists to rethink old rules. Money printing didn't cause collapse as expected. Markets remained calm. Confidence persisted. The world struggled to understand this anomaly. Central banks gained unprecedented influence. Their policies shaped everything from markets to households. Governments relied heavily on their guidance. The balance of power shifted quietly. Investors adapted to the new reality. Risk-taking increased. Markets depended on policy announcements. Confidence was engineered. Stability was artificially maintained. Japan's decades-long experiment also highlighted hidden fragility. Systems relied on continual stimulus. Debt levels remained historically high. Economies became interconnected. The risk of shock lingered. Policymakers worldwide took notes. Japan had proven it could survive extreme monetary policy. The lessons spread globally. Other nations adapted similar strategies. A silent revolution unfolded. Central banks became the ultimate safety net. Markets and governments depended on their actions. Any misstep could trigger turmoil. Confidence was both fragile and engineered. The stakes grew enormous. Yet, despite all risks, Japan's financial system endured. Printing money didn't destroy it. Inflation remained manageable. Markets stabilized. The unthinkable became the new normal. Japan became a model for modern finance. Policymakers around the world looked to its example. Lessons were studied carefully. Strategies were copied. The experiment influenced global decisions. But a lingering question remains. Could this experiment last indefinitely? Could economies survive continuous money creation? Could debt grow forever without consequences? Uncertainty persists. Japan's financial story is both a warning and a guide. It proves money printing can stabilize economies. But hidden fragility remains. The world watches cautiously. History continues to unfold silently. The world now operates in a new financial reality. Money creation is no longer taboo. Central banks are the ultimate stabilizers. Economies depend on their actions. History has quietly changed forever. Japan's decades-long experiment continues quietly. Few notice it daily. But its impact is massive. It shaped global monetary policy. The financial world will never be the same. Every crisis today is influenced by Japan's strategy. Printing money, stimulus, and central bank support guide markets. Past lessons inform present actions. Economists constantly analyze the model. The experiment remains alive. Yet hidden dangers remain. Debt has grown historically high. Markets rely on continual intervention. Fragility exists beneath calm surfaces. A small shock could trigger chaos. Japan became both a guide and a warning. The experiment stabilized economies but introduced hidden risks. Lessons are applied globally. Policymakers proceed cautiously. The world watches silently. Printing money no longer triggers panic automatically. Markets adapted to the new rules. Confidence can be engineered. Stability is maintained artificially. The world operates differently than before. Future generations may inherit hidden risks. Fragility lurks under decades of stimulus. Economies appear stable, but foundations have changed. Policymakers must remain vigilant. History provides both guidance and caution. Japan's experiment has become a blueprint for modern finance. Printing money, stimulus, and central bank support are repeated worldwide. The financial rules have evolved. The world has entered uncharted territory. Yet uncertainty remains. How long can this system endure? Could markets survive endless money creation? Could debt grow forever without consequence? The questions remain unanswered. Japan's financial story is both a warning and a guide. History was quietly rewritten. Printing money stabilized economies but introduced hidden fragility. The world watches, waiting for the next chapter. What will happen next?